Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity. It is Sunday morning on the West Coast. Yeah, looks like we're live on YouTube, so that's good to see. Just a quick apology to YouTubers. I know I gave you a little sort of false warning, false start there this morning. I tried to load up the streaming service on YouTube just because they, even right now it says Hangouts on Air is going away later this year. For quick streaming, try YouTube webcam. So I guess, we're contemplating whether we move to, there's a bunch of different services that we're test driving right now. And interestingly enough, I guess, I don't know whether it's Big Brother or whether it's a big conspiracy or whatever, but it's actually pretty difficult for us to actually have these big sort of group hangouts together now. It seems they just want to funnel this towards sort of like a one or two person streaming out to sort of a YouTube audience that sits as an audience and not active participants in the hangout. So enjoy this, guys, while it's still here. I don't know whether you're aware, but as I do these weekend shows, and I don't know whether I'm going to screw this up or not, but what I actually, there's Brian. Brian needs to take a shower. I have to end this soon enough. I don't know how we're supposed to do it. Yeah, there's the present to everyone. But you can see in the Hangout as we're sort of recording here on YouTube. There's a whole bunch of people hanging out in the lounge with me here. So we may lose that going forward, guys, which kind of sucks, but we're trying to figure out workarounds. And it is still relatively early Sunday. Once I'm done this, I'll go get pretty for the boy and make sure I'm shaved and polished and stuff. So I don't, you got sort of a sneak peek of what does Weekend Brian look like. Anyway, good morning, everybody. And, I know I take way too much time to do these. We'll be here an hour and a half if I'm talking about my beauty care products and grooming techniques. Anyway, we do have a couple ladies in the lab, so better not be talking too much, giving away all my beauty secrets. Anyway, nice to see you back in the fold, Alicia. Alicia, did you get to watch the volume profile modules and the group tutorial session? I think we had a really good session there. What was that? That was on Friday, wasn't it? That was actually a really fun. That's one of my favorite modules to teach and to do. All right, so I suppose we ought to get to work here. What I like to do, and actually I was a bit surprised. I mean, the level 1 class today did fibs, retracements, and extensions. And I've actually recently, Coinigy has a whole new platform that they've developed. They've taken advantage of this developer cycle, very much like what we're trying to do. Try to take advantage of this developer cycle as much as TRI can to get all our ducks in a row. But that's here nor there. Coinigy has a new sort of platform out. Also, too, Brian talks way too much. The previous little tutorial videos that I did for them, were a few years old now. And very long. So actually I went and tried to do like 10-minute summary videos on using these tools. So level 1ers, and I posted this in your chat room, be sure to grab these cute little 10-minuters. And anybody really on YouTube, you want a nice little resource of how to draw fib, retracement, and extension. I did those two tutorials up through the weekend. So those are out there. There's available. Yeah, and I would imagine, all TRIers, this is great little. It's a 10-minute little video. Coinigy said that they're going to be blasting this out on their site and stuff like that. And, we'll try and do more and more, especially as the level 1ers are going through their material. I might do just quick little 10-minute sections on each of their topics as we go along. Level 2ers, when we start getting into Gann and future structure and, COT reports and stuff gets a little bit more difficult to do videos on those, the little 10-minute ones. But nonetheless, just an FYI, I do like to take the time through this weekend show and talk a little bit about what I've been blabbing about on Twitter, and that was a big thing that I did through the weekend. Sounds like somebody has the sniffles. So if you could maybe just throw yourself on mute, I would be greatly appreciated. Dan, is that you sniffling away? I don't know. Okay, so where do we want to begin? Usually I like to just sort of, the level 1 class, as I said, didn't really have a lot of questions coming out. We have, of course, the group tutorial session, or, the pre-recorded lectures, very detailed, great material, perfect learning, understanding where and how institutions put bottoms in markets, how they often back markets up into those levels to reload, and how that 61.8 to 78.6 fib sort of zone often lines up really nicely with those, what I like to call institutional fingerprints. Super, super valuable information that we just did there in the level 1 course. I do understand the audio is kind of crappy, so my apologies there, any level 1ers watching this. Maybe we'll have to go and record the whole thing again. Who knows? But nonetheless, the information is solid if you can just get through the funny audio vibe. And as I said, I think it'd be a really good idea for you guys all just to throw these quick little 10-minute snapshots into your files, into your journals. And actually, the end result of that was a really, really cool roadmap. I mean, really, everybody on the YouTube page, on Twitter, on the site, even, level 1ers are just getting going. Even the level 3ers and alumni. I mean, this is a great little roadmap just to keep in your back pocket. What are the key levels that we need to keep an eye on good old Bitcoin going forward here? And really, I could probably do like an hour-long conversation just on this one image. It is in log scale so that we can actually see the things like projection levels should we break out to new highs. If we leave it on linear scale, the numbers just get ridiculous and you can't see the price action. But, the thing that probably jumped out at me the most about this study that I did over the weekend was the simple fact that the market ended up Wing right off that 78.6 level. I can't tell you how many times I've seen this in my career. It's ridiculous. And it's just, I mean, literally Bitcoin, we could go back 2015 market. Bitcoin bottomed right off its 78.6 level. It's remarkable how consistent that is. So that, and I even put here, W coming off the line in the sand. Cliche. I mean, it's ridiculous. I also put on here too, which I thought was really interesting. I did a reload zone study off of the Goldman Sachs low and this is the kick in the pants, is that this is just the low from the summer of 2017. And what a difference the TRI site is from then. I mean, it was just absolute euphoria through this market here. And it's remarkable. Price is quite a bit higher than where it was then. And yet the sheer tone of the market is very, very different. I suppose that's a function of the altcoins, basically the wind coming out of their sails. But ironically enough, even when I was traveling through Europe last summer, price technically is actually higher than what it was last summer. So, and this is why I absolutely love sort of like little old lady kind of thinking to investing, is if you just simply put yourself on a plan that I will force myself. I love the fundamentals of this story. I'm a believer in cryptocurrency. I think the fiat system is flawed, right? All you do is you just simply say, look, I'm going to wait for markets to move at or below reload zones. And I'm just going to put myself on a nanny nibble strategy, maybe like buy like 1/10 of a position, maybe like once a month or maybe once every couple months or something like that. And you're just dollar cost averaging your way in here. And the irony of it all is that people that did that through the summer, I know for certain when I went to Europe, the people were rah, rah, rah. And then the floor fell out of the market there last fall. And man, the market just destroyed. There's so many people lost interest in Bitcoin. And yet the irony of it all, you want to see something that's really cool, is our level twoers are doing WD Gann right now. And I pulled up a chart, but geez, now good luck in finding it. And I just asked, what is WD Gann think right now? And Mr. Gann actually says that markets usually bounce back to 50% of whatever the move was, either up or down. And usually that 50% bounce occurs in about 50% of the time of whatever the down move was. So if we just measure, first off, the price, 50% of that move, and then we also measure 50% time window of that move. Look at this. I mean, we're basically just like right on course. I mean, there's nothing really shocking going on here. It's quite remarkable, really. But anyway, that's the big thing. Colleen, you're in level 2 now, aren't you? So this is exactly what you should be doing, off that gold chart. I think it was the same thing. So the irony of it all is, for something like Bitcoin, this is just, well, there's nothing really out of the ordinary here. But anyway, back to our original post about this tweet. Nanny nibblers, right? They're just nibbling away here at or below reload zones. And now you can actually see, if anybody had the patience and discipline to do so, now they're actually up on their trades. And now, this is where we get into this whole timing thing. Yeah, but I want to buy the bottom, Brian. And I got to tell you, people, I mean, if there's one thing that you can somehow learn from good old Brian, it's the power of the weekly W's. Alicia, Colleen, did we try and drive that into your noggins through level 1? Did you get that message? Okay, good. And now, people that took the course, 6 months ago, a year ago. Dennis, were you in Colleen's class or were you in the term before? Can't remember. The point here is, I mean, it's just W's, weekly W's. All you people, there's 44 people. Hit that like button, smash that subscribe button, ring the bell, all that stuff, right? And actually, I got to say, I was watching the video back later on, and I noticed Colleen's like a total cheerleader for TRI over on YouTube. So thank you, Colleen. Totally appreciate that. And, by all means, our education material works. I mean, it just does work. 3 reasons for a trade, right? Location, indicator confirmation, structure, go. It just works. So learn it now or learn it 10 years from now when you decide you want to learn it. But this stuff works. It's ridiculous. Well, that's good. Khalid saying the only funny thing is it's in your sleep. Khalid saying she even asked herself whether she sees W's. I know. Well, I had some people that came to me that after the housing crisis, right? And they got absolutely destroyed through the housing crisis. Colleen says, oh, geez, I wish I had learned this 10 years ago. But I had people that came to me after the housing crisis and went, oh, gee whiz, Brian, if I'd only known you before this, I wouldn't have gotten destroyed. And if anything, guys, that is a really good heads up, right? Maybe, I mean, the market's going to do any old damn thing it wants. We have to remember that from right moment get-go. And that's why it's always extremely dangerous to get into the prediction game. And yet the irony of it all is most people in the public, that's all they want. Tell me where the price is going to go. Should I buy? Should I sell? What level should I buy or should I sell? And what you have to understand is that's a trap. And I'll make that absolutely clear from day one here. I am not in the predictions game. And it's ironic because I even say in all of these videos and all of these sort of public, interactions is, you all know what I think of people's opinions. Unfortunately, right, that humans are a herding animal. So what they really like is they like for someone to say, I think this is going to happen, and I'm willing to bet my bottom dollar on this. This will happen, right? Making predictions and all that, and then they get the big followings, and it turns into things like BitConnect at the end of it. So please understand, I am not in the business of making predictions. I don't know what the fuck's going to happen. And the funny thing is nobody, this is kind of a funny side story, and I'm maybe on a pulpit here. I'm sorry, everybody, if I'm wasting your time. Times to this until I get back to talking about charts. If you're not already times doing the speed on this. But after you would think that the collapse of the Soviet Union, you'd think that would be a pretty big sort of a global event, right? Like historic event. And yet, there's a lot of people that are in the prediction business and forecasting the future. And they did a study in the early 1990s where they went back and they looked at all the astrological forecasts for like the past, 30 years. All of the sort of prediction sayers, everybody that basically was in the business of telling you what was going to happen in the future, and not a single one of them actually predicted the end of the Soviet Union. Not one. So the bottom line here is don't get into the habit of trying to predict the future, because you just don't know what the fuck's going to happen. You just don't know. Now, we're here to make money from trading. What the hell, Brian? The point here is that what we really have to do is we have to vet what we call setups. What are the reasons that are going to get you to act? That when you see something happen, you've seen it happen enough times in the past, things like, reload zones and 7Ws off of 78.6s, you can take a reasonable shot that statistically the idea is going to work for you. And then around all of that, it's a conversation about risk. Well, how much are you going to risk? Are you going to bet your kid's future, your kid's college fund? Are you going to bet your retirement on it? You're going to mortgage the farm, as they say? Or are you going to take it conservative? Maybe just bet a little bit of your portfolio and, define a level where, if you're wrong, you get stopped out and you walk away and say, well, didn't work that time, no biggie. Are you going to take a strategy like Little Old Ladies where, I really like this name down here. Good fundamentals. I'm going to bet enough so that, if it goes to zero, it's not really going to hurt me. That's entirely up to you. And I we have an education program to help you vet what are your reasons that are going to get you to act. What is appropriate risk? How do you define risk? How do you define what type of risk taker you are? That's the hard part of trading. What's really interesting in this world is, of course, everybody makes predictions. And, I was kind of making fun of some people, not really fairly, but some people down when we were like down here, they were squawking about shorting Bitcoin and it's going to zero and all that kind of stuff, right? And obviously they just got run over. But it just goes to show, don't get into the business of telling people where the market's going to go, because it's a mugs game. You're just not going to win. You might win in the short term, and that's the scary thing, right? Because they always say new people to trading, the worst possible thing you could have happen is for you to have a whole bunch of success right away, because then the market turns around and this is a game of statistics, and maybe you go through a little period of, well, geez whiz, I'm not predicting the market at all. And all of the followers that blindly believe that you could walk on water, they all just disappear. And if your career is based on that, you could actually get yourself in a bit of hot water. So with that said, you know, I think it's a good idea to build setups, you know, and if you're going to act in the market, then act. And if you know, the market is not presenting the criteria that you need to see to act, then don't act. If we use this example here and this whole concept of weekly W's, you can clearly see that we can make the argument we have market structure and we have a level 78.6 trade location. We're also against previous key lows. We don't have any indicators on here, but if I'm not mistaken, I think we've been squawking for quite a while about how there was a really wide weekly MACD bullish divergence that was working here. And then finally, you get your W that comes in. That's your price structure. There's your 3 reasons and rock and roll. If you called me up and said, Brian, I took a trade at 442, 43, 4400, whatever this breakout level is here. If I was a little old lady and I put less than 5% of my stake, what I'm working with, into the idea, and I can risk to zero, cool. If I'm Joe Sixpack and I can risk, I'll take 10% of my portfolio and throw it in here. But if it goes down 50%, I got to walk away. Cool. If you're a Mr. Margin Trader, right, and you put on a leverage trade that if you get stopped out of here, you walk away. But obviously, maybe you put on like maybe 1% of your portfolio at like 10x, right? So then that way, if we get bust out through here, well, your margin's gone. But if this kind of scenario develops, well, you're just sitting pretty, and Lambos are on you. The point of the matter here is that clearly off of this chart, you can see where the level is that you should have been acting. The problem we get into for investors, keep in mind this is a weekly price chart, is as we sort of climb our way higher, does it really make sense to add new positions from an investor perspective? And I would have to say, unfortunately, no. And actually, I saw one gentleman who I thought was really cool. And he said, try not to chase in here. You're gonna, if you want to invest and you're like waiting for the investor levels, weekly W's, reload zones off of higher time frames, weekly MACD divergences, you might be waiting a while here. All right, but you're gonna have to wait. It's as simple as that. It sucks. Now, for those people that, hey, I'm a trader, man, I'm in here, I want to be long, I want to be short, right? I like the idea of our weekly moving average system, and I think that's sort of like this image. You can see all the sort of trending signals have been turned up here for quite a while, especially on the big boys, right? This trend is actually, it's not really old, but it's put a few miles under its tires. So I like to look at this, and as long as this relationship is pointing bullishly, i.e. green background, well, then I'm going to try and force myself to hunt long setups. I want to trade with the trend. Now, if this thing gets absolutely egregious and price moves far, far away from these moving averages, I can understand guys hunting shorts. But on balance, from an investor sort of swing trader perspective, I'm best served hunting longs. And checks of the fast moving averages should set up potential trades. On Bitcoin, for example, we turned back up basically off of that double bottom breakout. My system's a little bit slower here. It's interesting when we put on the institutional moving average system. If you went to say like a prop firm or a trading desk or something like that, you often see them, they run the 9 and 18 week moving averages. And it's ironic because this go around it got them in basically right on the breakout. So sometimes my system works awesome, sometimes they make me look like a monkey. So I think 9 and 18 and 9 and 18. I don't know whether I want that on there. I'm not quite sure why that is all showing, but if I go like that, what happens? Nope. Okay. I'm not quite sure what I've done here. I love these tools that say, oh, here we are. That's why. there's more choices. That's why. There we go. So you can see that the institutional moving average, I don't know whether you can see that, kind of bad colors. But it basically turned up, I'll make that yellow. There we go. You can see that they flipped to the bull side right in here on this breakout. My system came in through here. Their system came in through here. And you can see that, they were pretty well served. They were short, hunting shorts, hunting shorts, hunting shorts, hunting shorts. And now, boom, all right, now we're on hunting longs. So really long and short of it here is, as long as this moving average, and this is the institutional system, as long as it's pointing bullishly, and again, like I showed you just a moment ago, my system is just crazy Brian. He's kind of a bit of a weirdo. Likes to use the 13-period EMA and the 30-period SMA. As long as this is pointing bullishly, I want to be hunting long setups. So I have to wait for pullbacks. Investors, it looks like you kind of missed the boat here. If anything, investors, keep in mind this is a weekly price chart. You're probably best to just, you're going to have to run running fibs. Where are things like reload zones, right? Gee whiz, what a coincidence. 78.6 is actually pretty darn close to where that original double bottom is. And maybe through the fall, we work our way back down into these levels and, set up another investor signal. But for the time being, I think, at best, we can look at these as sort of like this is a trading environment now. So what do those sort of trades look like? The traders have been sort of squawking, been using actually, you know what I want to show you, which is really cool, is I've been using sort of a two-pronged approach here lately. I'm a big, the trading model that got me funded as a prop trader was this thing called the bot setup. And, by all means, come on the site, do a 7-day trial, and you can learn about the bot and all that kind of stuff. So in essence, beautiful double bottom breakout here. Actually, it was like a triple bottom off of the bot level. So that made sense. But I also, at the same time, I built a fun little algo out of my DI system that I used to do manually. Hell, I can even show you charts back from like the early 90s where I used to take all the indicator score readings and then add them up and create like an index. I mean, that's how long I've been doing this. But now I've got to the point where the script actually gives me like multiple time frames and tells me when they all are pointing the same direction. And I got to tell you, man, this algo is so awesome. I'm just having so much fun with it. And when it lines up off of other setup levels, things like our LJ trendline breakout setup, our bot setup, when I get these signals all to correspond like that, oh boy, look out. And sure enough, look out. It's just remarkable. So, but this is interesting, right? So this is the way that I think that people have to sort of approach the market right now. If you are a Bitcoin enthusiast, we are well off of the actual breakout double bottom W 78.6 level. We're not in investor window anymore. We've moved well beyond that. And the interesting thing is we're actually starting to get up into area. Now, keep in mind, this is a log scale. So these numbers get smaller and smaller and smaller and crunch together as we go higher and higher and higher. If we look at that on a linear scale, 1 for 1, we still got probably a pretty fair ways to go here. In fact, actually, you know what? This is the best chart to show you, this one over here. Right, so there is that reload zone up top. I had put out quite a few messages recently that there's Mr. Gann, right? And remember, we talked about we can't really decide whether a bear trend has actually resolved until we actually see a resolution of this 38.2. I don't know whether we can actually call this resolved. I'm a bit skeptical, but that's, it's Brian's opinion. Remember, what does Brian think of people's opinions? But anyway, you shake it. I have had this little note here, short-term target zone. on my charts for a while. And I still think that we're sort of doing that 38.2. Are we still a bear? And this is nothing more than just a very normal counter trend rally. Where's the chart I wanted to show you? Yeah. And this is, just very normal, very healthy WD Gann move. I'm kind of feeling like that's the way it is. It's interesting how we have this really powerful double top breakdown right off of this level as well. So it looks to me like there is a hell of a lot of resistance right up in this area here. When I did the videos with Dav, remember we said look left and draw your horizontal support and resistance. As we break each of these levels, you can kind of see, like here, for example, when we broke this level, right, up into here, you can see there had to be some back and forth, right? The market had to reload and then ask, okay, well, do we really want to be up through there? And, the answer is yes. And so the next logical stopping point is that level. When blowing through that, and I kind of think that that's what we're fighting with right now here. If you zoom in, right, so there is that high. You can see how we went sort of zipping up beyond it, and now we backed away a little bit. We're just sort of asking right now, okay, well, do I really want to accept up here? And the answer might be just yeah, rock and roll. But the old adage, right? Show me a new high, I'll show you a buy. So, if anything, what I would kind of hope for is notice this nice consolidation off of this level. I'd actually kind of hope that we could consolidate a little bit and build a base here. But, like I said earlier, the market's going to do any old damn thing it wants. We've gone through this level. So, look left. Where's the next level? There's that one there. And that's why I said this double top. I mean, we got two highs right in there. And you got another high right in there. So, oh boy. That's basically what I think the market's gunning for. And there's good old Mr. Gann sitting there just staring at us in the face. So back to our conversation about, okay, how am I going to trade this? I really think, and this is just, I've found this personally over my career. It's a lot easier just to wait for consolidations, wait for these kind of structural patterns, and then at least you can frame your risk. And if we do actually break out of a trading range, well, you just buy the breakout at the top of the range, you're going to risk down to the bottom end of the range, and away you go. So, as we look on the weekly charts, do we have any sort of ranges here to work with right now? Not really. So, weekly higher time frame can't really touch this stuff. So that takes us sort of back down to lower time frames. Okay, well, I'm maybe a swing trader. And as I sort of showed you, here it is. I wanted to show you. Had two setups working. We had this big bot, and I remember when we were talking in the lounge going, damn, this is one hell of a big bot. Basically of like $500-600 risk on this trade setup. I mean, not for the light at heart, that's for sure. You can see how the market chugged its way up, move stop to break even, move your stop to trailing. And we started saying, okay, well, I guess we, wait for some sort of pullback. I even remember saying that, if you were really chicken shit, maybe just get the hell out of here. But, I can definitely see, whoops, I want to move that. High to low. New high, okay, I can move my stop up to low. New high, I can move my stop up. 3 high low method kind of idea. They wouldn't move their stop there. They would probably have it here now. 1, 2, 3. Okay, we can start moving our stops up kind of idea. Bot target was hit. Ding, 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 ding. And this is kind of interesting because this is sort of it's an experiment that I'm running right now. The algo went uber bull here, and we had a nice range breakout for the algo to work with. And I think that was the sort of, and this is the hard part to actually program. But this is sort of what I need to find, is that the algo, of course, is one reason to justify taking a trade. It falls under reason number 2, indicator confirmation. But you still need some sort of structure to frame risk. And so, like here, for example, the algo, all the indicators started going uber bull, but you notice there was no follow through on the other side of this, right? The market went up, made a high, and then just sort of petered. If we had broken out through that high with the algo still uber bull, then I would have said go for it. Kind of like what you saw here, right? Market rallied up, algo goes uber bull, we got a range, algo still uber bull, go for it. So 2 to 1, sell half of the position, move your stop to scratch on the remaining. So Algonaut's doing great. But this is kind of an interesting debate right now, because the bot traders, and, please understand, when you are like an actual professional trader and you want to trade and you've got like, this month's rent on the line kind of idea, you a lot of pressure kind of idea. You want to try and build trade setups that are least amount of anxiety as possible and the least amount of thinking while you got your money on the line. Because I guarantee you the market's going to try and give you reasons to act emotionally. And as this sort of illustrates, really what you should have done is just be extremely patient and just wait for the bot levels to hit. So this would have booked a nice 3 to 1 win. Way to go. Woohoo. What I find interesting, and we often see this happen, in this particular case, this is what we call an alt bat. And the level 3ers just did this module on harmonic trading. So the alt bat actually goes A to B, and then C, D move is actually up to potentially 127 and can be as high as up to 1.618. So it was really interesting when we were in our harmonics class on Saturday. Literally, I just sort of drew this out and said, well, the bot is not harmonic trading. We have to understand that right from the get-go. And I often see when I used to trade the bot in the pits, but also, even crypto, we often see that the market will actually go and shoot up beyond the bot's target. So bot traders, ding, 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 ring that register, you won, way to go. But you see this pop up here. Now, the question ultimately is, who's buying up here? And unfortunately, we know the answer to that. Right? And what was really cool about this particular example was that, for the more advanced traders who can, actually trade things like alt AB equals CDs, this 127.2 is actually a potential trade location. In fact, that's what it's called, a PRZ, potential reversal zone. And the key to this is you want to see one concept as prices coming into this level. Who can tell me what that concept is? Well, and keep in mind, this is trade location. So that's reason number 1. We have 3 reasons we want to ideally find to try and justify a trade. So there's trade location. There's 1. What's number 2? See if anybody on YouTube's even listening to me. There was a guy on when I used to do these videos on like TradingView back in like 2014, 2015. There was one guy who used to say, I just throw your videos on, Brian, and you get such a monotone voice and you never stop. It's great to just fall asleep to. All right. Well, it's good to see everybody in the lounge here on the Hangout is getting this right, so that's good. I actually don't see a single person on YouTube. There's 80 people there, and not a single person. No, Oscar already said we had location. Remember, that's 127.2. Oscar, aren't you in the level 3 course right now, or is that your brother? No. Yeah. No, you're supposed to be in that course right now, right? Anyway. The answer is, thank you, Kenny. Kenny got it, is we want to see some sort of indicator confirmation. And the real word that I was looking for, that I hope that what people got, Dan, I see you popped over to YouTube and you answered it there. Cheeky bug. Is divergence. And I thought this is really cool because my partner in crime here, who sort of keeps us pointing forward, Julian, he absolutely loves using RSI. And lo and behold, can you see there's that 127.2? Here's a nice divergence. And what's really cool about this, and I haven't thought about this at all, but I've been just sort of I've been humming and hawing about this, but really interesting is that the algo itself is actually in divergence here too. So I don't know. I mean, that's something, Reza, this is something, you're here, aren't you, Reza? Yeah. This is something I think you might be interested in, where your algos, your actual trade signaling systems are actually in divergence as well. That's kind of cool, eh? But anyway, the point of the matter here is as we're running up into that 127.2, keep in mind botters, ding, 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 they're gone, right? They've taken profits. Who's coming in here and buying so late in this bull run? Clearly it's the public. Hello. There's the public right on cue. Hi, public. It's the public coming in and they don't realize that they're actually walking into a trap. So can you see everybody here how RSI is actually making lower highs as the price is working higher? Now, I mean, you want to talk about a trader's trade, and that's what I even put on here, right? Trader's trade location. And Riza, we really got to get you totally schooled up on the school program because you have to understand harmonics. But anyway, back to, sorry, totally distracted there. 127 RSI divergences, and lo and behold, look at this incredible little cute little setup here. And everybody, what is that cute little bar right there? You probably heard Brian talk about this stuff before. And usually, if I see a chart like this, I'll actually tweet out, we've got bull bear battle lines drawn. So you can see we come into that 127 and look at that cute little inside bar. Just the prettiest little inside bar. Absolutely textbook. And what was so funny about this is everybody was all, and it's so typical crypto Twitter, right? Everybody's like, oh, man, you better buy. And then this candle came in, and all of a sudden crypto Twitter just went, their jaws just dropped. So typical. Anyway, so long and short of it here is I think this was, I mean, if you fancy yourself a trader's got a trade, I think that was a trader's trade right there, and that was a quick dump. Running this school program and wanting to sleep at night, keep in mind trading like Bitcoin off of hourly charts means you don't sleep. This actually developed in a very polite zone. Now it happened to be right through the, what we call the New York kill zone. So actually, Alicia, weren't you used to ask about this all the time? Can you see how they basically set up that New York kill zone trade there? So not only do you have location, you've got indicator confirmation, you've got structure, but this is actually kind of cool. You actually have a liquidity event window, i.e. that New York kill zone. So, I mean, gee whiz, what a textbook trader's trade. Now, if any of you watching on YouTube and, anybody who wants to send this out to your buddy who want to trade like this, you can. Yeah, I mean, there's nothing stopping you, but you got to understand what you're getting into, and you better fully vet all this stuff out before you pull the trigger. Because, trading off hourly charts in crypto, it's pretty Wild West. And you can see all the kids that came in when that divergence started developing above the bot level. My hunch is they all got bitch slapped through this. And anybody who put on 50x, 100x margin, whatever, they got flushed. See you later. So welcome to crypto. So typical. Now, the interesting thing about this is that this is an extremely strong market right now, right? Off our weekly charts, this thing's pointing up, right? off of these charts. This thing's pointing up. We're coming into some significant resistance levels. But look how she acted through that last significant resistance level, 38.2. Poke its head up. Okay, we'll consolidate a little bit, and then boom. So, this is why I sort of say that I'm kind of thinking, shorting this market here, oh boy, this is dangerous. Unless you are at this kind of stage in your education, in your evolution, wherever that damn chart went. Where'd it go? No, that's not it. Oh, I hate when I do this. Right in mid-sentence, and I just want to show you. Oh, yeah, here we are. Unless you're at this kind of stage in your education where you can actually identify things like alt bats, and you can identify divergence, and you can identify inside bars, and you can take appropriate risk, and of course you're comfortable trading on your platform, yada yada yada. You understand liquidity event windows. If you're not at that stage, I don't even think you should even be having this conversation right now. So please understand that, everybody. This is really high octane, advanced stuff. For sort of I consider myself basically a fuddy-duddy here. I've tried in the past to trade things like Altcoin and stuff off hourly charts, but you end up not sleeping at night. And I mean, gee whiz, in my advanced program right now, I got 90 students in the level 3 program. I can't believe this. This is ridiculous. It's supposed to go the other way around. The classes are supposed to be smaller and smaller and smaller groups as you get further and further along. So I literally, and of course I do daily videos on the site, and I'm supposed to be, like good mentor, and, keep your head on straight and all that. And anyway, the point of the matter here is I mentally decided I can't be trading off hourly charts. It's just too fast. And you literally need to be, working your plan 24/7 in crypto if you're going to do that. So, how am I approaching this? And that's this 4-hour chart, and this, what we call like swing trading. And I really love this setup. This is absolutely textbook. And the cool part about this, and this is what I really like about what I do here, if I, can take a moment and actually toot my own horn. But I literally walk these setups through from the very beginning, where, all right, this is fired. I have no idea what's going to happen. It's a trader's life. Traders got to trade. I mean, you can literally go from day one of the trade setup right through, step by step by step. Somebody was like, well, aren't you a bear? And aren't you calling bearish? Like, you can see, even as the setup is just getting going, right? I was tweeting out this chart setup. So you can't say that I don't eat my own cooking, and I don't sort of, here is the trade, right? Little 3 thumbs algo goes bull on the 4-hour reading, and I even said, watch this level, right? I mean, and literally we walk this trade from basically beginning right through to end here. Right. You can't say I'm not a completely open book and open reference. And that's what I really love about what I do, is that I don't give you guys any bullshit. That trade might have crapped out and gone out, and I would have gone, boo, stop hit, that sucks. Well, next bus in 10 minutes. Anyway, so 4 hours. If you're trading the bot, then I think you ought to hop off. Went a little bit too far, ran into some trader trade levels, divergences, big bitch slap. But for the sort of swing traders, and especially like this algo that I'm running recently, and here's a good example. If we go back in the past, I'm tracking this algo very, very closely. But here's a good example where sometimes it's not really in your best interest to get out of a trade. And ironically enough, what I used to work with a guy who used to say that, I could tell the difference between an amateur and a pro. The amateur is like, okay, where do I take profits? Where do I take profits? Where do I take profits? And the pro is like, okay, where do I add to the trade? Where do I add to the trade? Where do I add to the trade? But, here's a really, really good example of, sometimes it's not really in your best interest just to walk away completely at 2-to-1. So in this particular case, you can see the ridiculous number here, but I don't think that's right. It should be like off of those lows. But even if we go off of those lows, right, in this particular case, 2-to-1, Yeah, let's see if we can zoom in on this. You can see how tight the consolidation was, right? And then the algo comes in, says, okay, get off your butt and get in there. On some sort of, come on, yeah. On some sort of market structure, right? So something like that. And 2 to 1, right? If you just sort of walked away from everything just at that level, 2 to 1 off of that was like just basically a tag of these highs, right? Right in there. So, this is a really good example where, maybe it's in your best interest to try and stay in the trade as long as possible. In this particular case, as I said before, the model says sell half of the position at 2 to 1. And then this candle happens, woo! And then as new lows get established, well, you just move your stop up. And in this particular case, this setup got what I would consider same sort of thing as that diamond that we're going to talk about here happening on Bitcoin right now. I think this stop got tripped up on the remaining part of the position right there. Could you have forced yourself to stay in this thing and stay long? Well, I suppose so. But, on this kind of trade, if you're sitting on just these insane numbers, and you can see what this is, it's just ridiculous. I can't even see what that number is. 27 to 1 risk reward. Hi, caramba. I'm inclined to think, okay, maybe we should be, just trailing stops, and any kind of sign of weakness, get out of there. So that's what that setup was there. But some of them, here's a good example. This one went up, the stop got trailed all the way up to here on the remaining. Well, actually, that was 2 to 1 right there anyway. So, this one here, right, that is a total of 5 to 1. Same sort of thing, sell part of the position at 2 to 1. Then just work stops, and you can see move, stop, move, stop, move, stop, stopped out. So here we are. 2 to 1 hit, right? There is 2 to 1. Move, stop, move, stop. You could even start, if you were super aggressive, move, stop. But I think, just slow poke Dinosaur Brian. I like the idea that we were sitting there with the stop, and we even had this, and I put tweets out saying, geez, when are we going to actually be able to get, to the point where we can move stops? The botters are already gone. And sure enough, this big ass candle came in. And so this to me looks like a diamond, right? Twinkle, twinkle, little star up in the sky. And that's sort of that same thing. You can, let's see. Where was that one? Now, this particular one, if anything, it's a good example. Sometimes diamonds fire, sometimes they don't, right? This particular one, it did go down and break those lows, but it turned down and went right back up against the old high. It happens, but I've seen lots of diamonds where, this fires and that's the top and see you later. And, when you're sitting on, ridiculously large profits, it's not a bad idea just to, get a little bit conservative. So, with that in mind, and it's not really the best example for you, but I'm just sort of ad-libbing here. With that in mind, I don't have a problem if these lows are tripped up and we just walk away from the rest of this. And that would, on balance, produce a, what is that number? 3.74 risk reward on the remaining position. So you come out with an average, 2 on half, 3.74 on the other half, about a 2.5, 2 3/4 risk reward on the trade. If you can consistently do that month in, month out, be right good, 60, 70% of the time, you'll make more money than you'll ever need for the rest of your life. Now, the interesting thing about this is there any potential bullish setup that might be developing here? Oh boy, right? What happens if we go boo to boo, and we go boo and boo? There's a certain robot that's coming alive here. So market makes at least a 33% retracement. But no more than 66. And we start making 3 higher lows. So 1, 2, 3. Oh, hello. So the interesting thing is that these setups, they constantly come and go. You don't know what the hell's going to happen, but look at that. You know, there was that diamond. This was the end of the move. It was a natural alt bat PRZ. The market did have a pretty violent short-term dump, but there just hasn't been any follow-through. The irony of it all is that if we don't break these lows and we actually do start making higher highs and higher lows, botters can actually start seriously considering stepping back in on the long side at like 10,850. And the cool part about it is hopefully you guys can see the W. It's trying to form here. It's interesting how this level, this 10,850, is probably going to set the trade up nicely here. My hunch is, though, that this probably develops more off of like a lower time frame chart. Let's see. Ah, there you go. So off of the hourlies, there's one low, right? Whoops, I screwed that up. One low, two lows, three lows. Look how the market is actually setting that level up as we speak. Now, there's no guarantees in any of this. No guarantees at all. You don't know what's going to happen. But if your trading plan is, look, I want to be long, I'm hunting longs, I just liquidated my position, I need to hunt for the next setup. Interestingly enough, it'll go long here. You get stopped out here if we lose that low. And the Algonauts, they'll be walking away because they're stopped out on the remaining trade. So, you know, it is what it is, right? Do you live a trader's life? You know, it'd be really cool to sort of juxtapose with this. Do we get any algo signals? Right now, the algo is not on board. There's Julian's RSI study. It just made a new low. So, you know, RSI I don't think is on board. But I love when algos line up with bots. So you can see, like we said back here, the algo lined up perfectly with this bot setup. Nice signal there. We're not really getting an algo signal here. So what that sort of tells me is I think this needs a bit more time to develop. I'd really like to see, you know, a little bit more consolidation here. You could ask, you know, do I get things like Devo signals to try and find momentum breakouts? Oops. Oh, fudge, I hate when that happens. Yeah, it's okay. Nothing really to write home about, but a wider W that's trying to come in here. That's kind of cool. So, you know, you get a little bit of indicator confirmation. Really like to see some serious buyers step up. If anything, this looks a little suspicious, and this is probably why the algo isn't spinning up really big bullish signals, because it has a lot of volume analysis components in the DI. So the DI is probably looking at this going, okay, you know, yeah, great, you got nice price momentum, but where the hell is the buyers? So, you know, I would say if I was going to be touting this on the site, I'd like to see a little bit more structure here. And, you know, I got to tell you, I mean, this damn algo is so kind to me, and it seems to be producing just the most beautiful signals that I'm just going to wait for the algo to tell me to go. Alicia's asking for a volume profile commentary. Question is, where should we look at that? We could look at it from a weekly perspective. You know, maybe we'll take a big picture. You know, I got to say, this does not look full. This looks very bothersome. Like there's still a lot of unfinished business here. So, you know, I've said this before. It's pretty unpopular, but I actually wouldn't be surprised to see Bitcoin actually trade back down to these lows at some point, maybe over the fall or the winter time of this coming year. You know, there's a lot of scuttlebutt that basically the economy's right on the brink, and this fall might be a great excuse for the market to break. Usually, though, Stock market usually doesn't break heading into a U.S. presidential election year, though. So I'm not quite sure how that gets spun. But for the time being, things are pointing up. If anything, Alicia, can you see how we rallied above value here? And this is a really good example of us asking whether we want to accept above value. Did you get that from the volume profile modules, Alicia? So, yes, we went zipping above value here. And the question ultimately is usually what ends up happening is a test of value high. We get rejected back down and we stay within value. And we just sort of ping pong back and forth. But sometimes, especially in very strong bull markets, we go zipping above value. We pull back to test the top of value. And then this market structure, i.e., breaking out of this high, is basically the market accepting above value. And so as a result, this market is in a bull phase here. And it's interesting how there's a little bit of a node here and there's a bit of a pocket here, sort of Milwaukee. And gee whiz, that happens to line up with good old Mountain Man. And that also happens to line up with an AB equals CD harmonic objective right up in that level. So, interesting from a volume profile, just strictly volume profile perspective. This to me looks like it's saying that I've tested the top of value, I checked the top of value, I've accepted being above value, and now I'm going to go explore here. And since there really wasn't a heck of a lot of business done up here, think that look left kind of idea. If any serious buyers actually come in up here, then what will have happen is value will shift higher, which in itself is actually an extremely bullish event. The way I would look at this is that we've got our trending market signal here, pullbacks, set up buying windows, and that a la the bot, the algo signals, all that. Investors were starting to get pretty risky stuff, right? And when this thing does top out, just think about it this way in simplest terms, right? Let's say you went and just bought this level. Let's say that the market did work up into the reload zone. All right, well, there's my capital gain. Woo, look how smart I am. But let's say the market then goes and M's out and then has to come all the way back down. Now that's my risk on the trade, right? Because I got a risk against the previous weekly W's. So, I could very easily see, and this is basically what happened through all of this, is that, yeah, the market is a bull and it's going up, but at some point down the road, the piper's going to have to be paid. And this was the piper, getting paid. Is that the right expression? I don't know. You sound like a troll. Oh, great. Wonderful. Do I sound like a troll? Who am I trolling right now? Am I trolling myself? Brian, you suck, man. So interesting. Zach says that the profile, I guess, value is actually starting to shift up. So, that in itself is a bullish sign. If volume can keep being pushed up here, then that means more buyers are coming in. The problem that I have here, though, is that you can clearly see that, and it gets scary, right? This is where it gets scary, is that at some point down the road, these levels probably should be filled in. Only time will tell, as they say. Now, if we go down to, say, like the daily, should we do stamp? I don't know if I should do stamp. Maybe we'll go off of OK coin. Well, there's that same image. It's interesting to see that we had a pretty big volume bar here, but on the profile itself, Alicia, can you see? I mean, if we just study the distribution of volume just of this rally, can you see on a relative basis, there's not a hell of a lot of buying coming in up here. There's a little bit of a node. But you can see where the top of value is, right? That's basically that level here. This is probably a really good example of the market accepting above value. That's that W right there. And what can happen on the other side of accepting above value. Woohoo! You can get these huge blast off moves. Because there just isn't that much business that was done up there, right? Now, this is kind of cool. The question ultimately is, where do you want to start the study? Here's basically the last cycle low, 40, $50. That looks bothersome. I don't know how you reconcile that. I suppose this is the POC. What is that? That's about $6,000. Still seems to be the POC. Anything would probably have like something along those kind of lines. Value high, value low, and a big FU would be a move down here. Now this is interesting, right? Because I don't know whether Stamp and Phoenix and stuff look like this. But for the longest time, this node down here was definitely the biggest node. So, I mean, there's been some serious buyers that have come in through here. Off this daily chart, you can clearly see the notch here. So this is sort of just screaming at me as a level. All right up there. And if I'm not mistaken, I think that lines up with that Mountain Man level, eh? So probably pretty good if, and I don't know whether we can or not, but if, interesting. That's actually the 50% level is right at that notch. That's interesting, eh? But remember, with OKCoin, everything's got a slight premium to this. Like this thing topped out at like 23, 24,000 or something, right? 22.6. So quite a bit higher than the cash market. I'll keep saying this. Off of the higher time frames, the trend is still up. We have no signs of an actual top. When I did the Twitter video there the other day, yesterday, I think this is like a really good sort of comment here. That you'll know that the bull market is over when we pull back to the 38.2, like we did here. We rally up away from it, and then we lose the 38.2. So we're not even, we're not even at the point where you can even draw 38.2s. We haven't topped out, but in essence, this little bull run that's going right now. Oh, actually, that's exactly what I just did there, right? You can see 13 period EMA, there is the 38.2. If this actual little bull run is done, we'll come back to the 38.2, we'll rally up away from it, and then we'll lose it. And on that event, the loss of 38.2, then we know that this up move is done. So I don't think it's a good idea to start, calling tops here. I think that's actually extremely dangerous. We might just get a big blow off top here. The damn thing jumps like $5,000 in a day. That could happen. Totally. It wouldn't surprise me at all. Actually, it's kind of cool. Justin, you say do MEX, because actually what I've done here is I've got the algo running across all of the exchanges. So I've got, here's MEX. You can see that algo signals, just some sick ass fucking signals. Excuse my French. I just communicated myself on Twitter or on YouTube. They're gonna get all pissy at me. This is adult content. Children beware. Oh geez, can't even see this now. Oh, weekly. Why did I do that? I want to go 4 hours. All right, so algo sig. You can see how they all line up, eh? Justin, can you see that? Justin, you did the level 3, didn't you? You should grab this damn algo script, man. It's just sick. You can see there is the exact same signal there off of OKCoin. And it even fired. Here was, I guess, the signal came in here on CME futures, right? Giving us a 4 reading for the structural breakout. Link for the script. Well, just PM me on the site, right? So. That's good, Zach. Okay, so I mean, it's funny how we were doing bots earlier. Look at that. I mean, they're trying to ramp this thing here. Maybe it breaks out now, but it's interesting to see how the algo is just not interested whatsoever right now. So I love this silly little algo. It just makes me so happy. So I won't be putting on any new positions. If anything, all I'm doing is I'm just nursing current positions. But you want to know what's so cool is check this. I've got the algo running across all of these markets now. And just some of the coolest signals. Like this is a crude trade that we've been talking about on the site. You can see algo goes uber bull. I want to see that in this case, nice 1, 2, 3 triple bottom, nice breakout. Look how close it came to hitting the 2-to-1 before the closing bell on Friday. And also too cool. This is a good example of a test value high here. You can see how there's this big old notch. I wouldn't be surprised in the coming week we actually have to pull back here. But the point here is that this algo works even off of all of these time frames. Here's a cute little gold one that fired there last week. It was interesting. The euro, and I've been bearish of the euro forever. The euro actually just fired one. A bit surprised to see that, but gee whiz, what a nice jump up there. So, as you can see, Brian's having a lot of fun with his little algo recently. Now, I wanted to talk to you, and this is really what I wanted to talk to you guys about. I haven't even got to what I wanted to talk to you guys about. But, if we look at our trending model, right? I've been talking a lot on the site recently, and it's been resonating with the site members, so I like this. But, we really would like to try and trade with the higher time frame trend. The problem here, of course, is that what's the relative risk? What's the relative risk of going and buying a Litecoin now? There's where the moving averages turn. There's the damn weekly W's you hear Brian squawking about. Now we're up here. We've actually hit AB equals CD objectives. That's a potential reversal zone. That's a PRZ. That's actually like a short trade location, like I showed you off of that 127.2 tag earlier. Look how far away we are from the moving averages. I mean, does it really make sense to go and strap on new positions on something like a Litecoin here? No, we wanted to be hunting them as they were breaking out down here. So, yeah, Litecoin's pointing up, but oh boy, this looks extremely dangerous. It's interesting that you mentioned ETH there, Darren, because I remember specifically talking both to the YouTube audience, talking to that the gentleman who does the Davo videos. What's that guy's name? I think he's a German guy. And specifically saying that I thought actually the relative risk reward of something like an Ethereum, because it was still down here just breaking out, was actually a lot more attractive than chasing Bitcoin. And ironically enough, I still actually think that. I mean, you can see where the weekly W is here. Can we chase it now? It's starting to get away from us. But the interesting thing is there's a 50% rule of just this range alone. It's still sitting up here at $458. And you know what? You want to know what the best sort of tell that that this thing was going to start to face rip here is our in-house analyst Thomas was just going absolutely giddy over this thing, which I thought was hilarious. He was just like, this thing's it's going up. I could just, and he's a really, really good trader. So he just was getting this intuition. He's been working on his charts for so long now. I mean, the guy is like a consummate pro. And on Friday's video, he was like stumbling over his words. He couldn't talk about how bullish he was of Ethereum, which I thought was absolutely great. But ironically enough, actually, I actually do like the Ethereum trade in here. Nice railroad tracks. Look at that. Beautiful railroad tracks. Beautiful double bottom breakout. But anyway, what I really wanted to talk to you guys about today was, okay, so you've got your list of cryptos, right? And clearly these guys all broke out through the spring and the late winter. So does it really make sense to go and chase those now? And I think the answer, unfortunately, has to be no. If you want to hunt setups, great. Wait for pullbacks. If you're a day trader or those kind of swing traders, okay, great. Down to lower time frames. On pullbacks that test moving averages and stuff and look for consolidations, can set up new trades. Totally fine. But what I think actually is more in your best interest is to look for the markets that are just turning now. And we actually have this is sort of like the senior list, and then we have sort of like the intermediate list. Now I'm sure there's some people that are going, hey, wait a minute, no, that one should be on the senior list, and that one should be on the intermediate list, whatever. I still think, while Trex and Binance and the US Big Brother and all that kind of stuff are still wrangling with each other over the shit coins, I think the shit coins, you got to kind of just leave them alone for the time being. You can pick and choose and cherry pick and have fun with them, but don't fall in love with shitcoins right now. This isn't their market. But I do think that the sort of intermediate names, this is where I think that we actually can see the opportunities now, because you can see they're just all starting to make their turns here. Some of them, like this XMR, Monero, he's already started to go. So maybe he's already gone. But like ADA, look at ADA right here. You can see it's just starting to turn back up. We got a nice breakout through these highs, and look out. And this one here, which is the one that caught my attention the most, it's actually got a nice W working. All right, so listen to that smartass Brian guy. He says, try and hunt for these weekly trend change signals. Try and find those weekly W's that have confirmed. Now what do I do? And this is really what I wanted to sort of the value of today is, I think what you do is, you build your matrix of ideas that screen fundamentally. Remember, we're rational analysts here. So we want to try and find, good quality fundamental stories. Is this NEM meet your fundamental screen? That's entirely up to you. I'm not going to go down that road. You guys are actually the crypto experts here. I actually default to you guys. Is this a good crypto story? Is this a piece of crap? I don't know. But the long and short of it here, this NEM has gotten relatively good reviews. So you can see, of course, this thing has come an awfully long way down. We are starting to get those weekly W signals, and then hopefully everybody can see. Now, this is a little bit more advanced, but this is a cute little inside bar reversal suggesting that, hey, maybe whatever consolidation following this big breakout, maybe that's played itself out. But at this point, what I would suggest you do is you pull up your weekly chart. You go, okay, it's trending higher. It meets my fundamental criteria. I need to now go into hunt setups. Now you drill down to lower time frames, and you can start applying all these sort of setups that we love to talk about. And this, I think, is a really good example, because there is that big weekly breakout. Boom. You can see that the market came back and it checked that breakout level. This is classic Wyckoff 101. In essence, the market's come and made one low, two lows, three lows, four lows, five lows, six lows, seven lows, eight lows, nine lows. Notice if we do an AB off of this breakout move, and then think A, B, C, D harmonics and things like the bot, there is the bot's trade level. If I risk against these lows, I buy the bot level. I can follow the rules as I work my way up with an ultimate objective of this 15 cents. So in essence, if I follow the bot off of this higher time frame chart that's saying, hey, I'm turning back bullish, I can now start to frame my risk and my participation on the trade. What's so cool about this, I said just a few minutes ago, but I love when I get algo signals that are saying, hey, this thing's going uber bullish, uber bullish, uber bullish. And I get those structural breakouts off of bot levels. And in this particular case, this also happens to be our trend line breakout model as well going through here. I now actually get what I would consider relatively high probability trade setups off of higher time frame charts that are turning, and you may find that this thing explodes higher here. Totally plausible. I did put this tweet out through the week. How would I recommend this sort of public to participate? Try and hunt higher time frame charts that have sort of suggested that they're signaling that they're turning. And then you fancy yourself a trader. I'm going to buy at this level and risk against this level, and I'm going to make multiples of my risk. Here is a great illustration of how you can use things like algos to get you long that align with trade setups like bots, that align with things like trade line breakouts. Obviously, no guarantees in any of this, but I would say that the statistical odds of a trade like this working are actually pretty good. So that's actually what I really wanted to talk to you guys about today. Okay, I've been blabbing away for an hour or two, so I hope you guys enjoyed the presentation. Giving you some food for thought. We covered a lot of different topics here today. I don't think there was anything else, so I wanted to talk to you guys about this tweet here. I don't think there's anything else that I really, we talked about, the markets, which ones are starting to turn and how can you hunt setups off of that. Having lots of fun in the stock market. And ironically enough, you guys need to understand, anybody who's like just known me since I've been in crypto, I was a stockbroker for like 15 years. I was a commodities trader, options broker. So, I know, crypto is near and dear to everybody's heart, but you'll never take the stock market out of Brian. It is interesting that Overstock is actually catching a bid here because of their crypto exposure. So I find that kind of amusing, and they're going to spin off that business. Some fundamental ideas that we've been kicking around the site. We have a great, actually, there's Zach right there. Zach is sort of our quarterback for our TRI SOF meeting, and we run a cute little model portfolio. He and I still got to get that goddamn money to Hawaii, though. But, we meet basically on a weekly basis, and this was an idea. It's in the pod space, CBDs, right? But they have a pretty robust business, and basically the irony of this stock is it's basically just trading at what the cash is on the balance sheet. And so because it's basically just trading at the cash on the balance sheet, this actually becomes an extremely attractive takeover target. Some corporate raider might just come along and scoop up the stock, because keep in mind, there's only 20 million shares out, 25, 26 million. The corporate raider might just come along and say, okay, I'll take the company out. If you can get it at or near the cash, then he'll just take the cash and move it over to another company balance sheet that he owns, maybe like a stock swap or something, and then just let this thing die. My hunch is, because almost half of the company is owned by insiders, the insiders won't have any interest in that. And if we get sort of rumors that there's going to be like a takeover bid, my hunch is this stock's going to launch itself higher. So anyway, long and short of it here, really interesting fundamental story, and one hell of a good looking price chart. And we'll know this thing's off to the races if it breaks out through the top of this trading range here. Keep your eyes peeled. This might be a really fun one for our TRI SOF meeting going forward. I think it's a really good idea that everybody watch this video, especially TRIers, especially people. You have a put on David's tea. That's good. Hey, how's that Beyond Meat short going there for you, Reza? Whoop. Don't. All right. Anyway, I think this is a really, really good video for everybody who is new to capitalism to watch. It might be a little bit over your head. They might go into a bunch of topics that you're like, what the hell are they talking about? But really good interview with how vicious capitalism can be. And the irony of it all is that we sort of, especially at TRI, is we sort of like blanket ourselves in this sort of PMA karmic experience. And if anybody comes on the site that's kind of bitchy, we're like, just go away, go away, go away. We don't want you around here. But, like Colleen, Alicia, definitely you too. Just coming through the level 1 program, you're just starting to learn how capitalism really works. Really, really good education on how nasty capitalism can be. So good lesson for everybody. All right. I think that's about all I wanted to talk about here today. I don't think anybody at TRI can say that we weren't looking for uppy here. As I said, this sort of weekly trend has turned back up. I'm hearing people squawking in the lounge that they're seeing Bitcoin rally here now. Actually, I guess that's over on the YouTube page. So I don't know what's going on here. Yep, we're back up against top end of the range here. So in a weird sort of way, we might actually even see this silly little bot that we just talked about here fire. I can tell you I won't be taking this. But at the same time, too, those people that were in this algo trade, as long as these lows hold and we start making higher highs and higher lows, then they'll actually just keep trailing their stops higher and higher and higher. So enjoy the fireworks. We might just get a wicked blast off here. Totally possible. You never know what's going to happen in this crazy market. Try and build your plan, trade your setups, play from a position of strength, PMA for the win, all that kind of talk. And just go slowly, right? And enjoy this market. I mean, the irony of all of this is that, and I actually was mentioning this to someone else. I remember, and I don't know whether I mentioned this in the video here or not, but I remember this is basically when Goldman Sachs put in the bottom on Bitcoin. This summer of 2017, I mean, the community was so rah Bitcoin and rah crypto, and everybody was just having such a great time. Joey Diamond's daughter was making fun of him and all that kind of stuff. I think that was into this event here. And then, price is substantially higher than where it was back then. And yet the tone of the space is very different. Very remarkable, really. So, it is what it is. Hopefully you can see where the weekly W's come in. Learn from this so that when you see this in the future, you can act. And I got to tell you, it looks to me that there are a lot of names that are just putting in their W's now and they're getting ready to join the party. So you can't say there aren't opportunities out there. I mean, they're just sitting there, right? This XCM is just, it's sitting there on a silver platter. Whether you decide to take this setup or not, that's entirely up to between you and your maker. Okay, I think I'll leave it at that. Have yourselves a great day, everybody. Heading off to the boy. Have a fun afternoon with him. Thank you very much, Grim. Great job in class helping the kids. Everybody, try and remember, especially on YouTube, it's free for you guys. But all the level 1ers who just did fib retracements and extensions, try and remember we've got these two cute little 10-minute refreshers there to add to your library. Thank you very much, Alex, for driving the bus Monday to Friday. Thomas, for doing your top-notch analysis and trading and commentary through the week. Thank you very much, Julian, Sjord, the TRI triumvirate, rocking this thing. Going to keep moving this bus moving forward. Basically, we've got the TRI meetup in about a month. So if you are going to be in Vancouver through the end of July, we got probably about 20 or 30 of us running around the city causing trouble. In fact, Chris, did you get that camper lined up? I know a couple of guys were going to, in fact, they were going to rent a camper van here in Vancouver. And one of our site members said, hey, you know what? We've got a camper van that you can rent from us. So it's like, score. So everything, 1 + 1 = 3. Can't wait. So T-minus 1 month and what? I guess about a week. Oh, geez. Yeah, about one month and 1 week until TRI 2019. Oh, boy. Can't wait. All right, everybody. Have yourselves a great day. All the best, and bye for now.